Hello and welcome to another financial analysis video. Today I'm taking a look at Ryder's system, which just issued a third quarter and full year guidance warning. Shares after hours fell to $70 a share, down 7.3%. So this stock is going to open very close to a 52-week low tomorrow. And basically, one of the things I saw when I read the guidance warning that kind of surprised me is that management downgraded earnings per share guidance for the third quarter. They downgraded it to about $1.72 versus $1.86, which is what consensus was. So it's 14 cents off. I'll do the math here real quick just to be safe about what I'm considering here. So it's a 7.5% quarterly downgrade, which is exactly what the stock price fell after hours. In addition to that, full year guidance was dropped by approximately 30 cents earnings per share for the full year. That's 5%. So despite a 7.5% drop, well, I should say despite a 5% drop in earnings guidance for the full year, the stock has actually fallen 7.3%. So I believe this may be a bit of an overreaction. And when you read into the statement, they had good revenue growth in the quarter. However, they had a large number of vehicles, larger than expected, come out of service. So maintenance technicians trying to support new levels of the fleet essentially caused their costs to rise, and as a result it affected their earnings. So it's something that once management gets on top of, they should be able to fix. I want to take a look because the other thing I look at here is I look down the road at their forward earnings, and I look forward and I look back, and I'll explain the whole thing as to why I look in both directions. First off, in looking forward, we see next 12-month earnings growth consistently coming down the road for Ryder's system, and they didn't say anything that I can read off in regards to 2016, so we can expect these types of earnings to continue. Now, interestingly enough, you look at $8.44 or even full year 2017, $8.25. That is not even 9 times what the current price is going to be tomorrow of $70 a share. I mean, that's a pretty good multiple, forward PE multiple. And now the reason I look back, I want to make sure that the company has met or beat earnings expectations consistently. And what we see here is that they have done that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Well, you get it. All 18 quarters that I have covered here, they've either met or beat expectations. So we're seeing still, we've got earnings credibility in Ryder's system, and we've got good forward earnings. So clearly, in my opinion, and I went to the wrong one, I wanted to go here. This is another way you can highlight this as well. This is a time series over the last year of both trailing PE in blue and forward PE in red. So if you would have bought the stock in December, you would have bought the stock at about 17 times earnings. Now you're going to get it around 12. In fact, you're going to get it for less than that tomorrow. And so I do pay attention to stocks that are actually at what I call 52-week price to earnings ratio lows, and that's where Ryder's going to be tomorrow. So you're really buying a stock and getting a better return on it than you did before. Another way to look at it too is the earnings yield. Let's have a look at the earnings yield. The earnings yield tells us what an investor would get as an annual return if the stock only traded based on its earnings performance. And in that same time frame back in December, you would have gotten 6%. Now you get closer to 8, and in fact tomorrow that may approach 9 depending on how the stock fares tomorrow morning. So again, this is another great measurement to show that the stock's price is coming under way more pressure than the earnings, and therefore it should be taken a look at. The other item for the technical investor out there that I'm going to quickly note is the relative strength index. Not very strong prior to this. I expect tomorrow to see it dip down into the high teens or low 20s unless the shares have a full reversal, which I don't think they will. But again, it raises a great buying opportunity, and I may get into this stock in the next few days. I hope you enjoyed this video. Happy investing.